So today we are bringing you a quick, candid conversation on last year's global, India-specific market and asset class highlights. We'll walk you through the key slides and share what really mattered. Vinay, most investors had gotten used to seeing high teen and low 20 returns, especially in India. What do you think went wrong last year?
Honestly, nothing really went wrong. It was the expectation that disappointed. Markets came into 2025 with staring high valuation, especially in Indian equities. When expectations are stretched, even decent outcomes feel underwhelming.
So it really wasn't about the fundamentals breaking down.
Not at all. It was a year of consolidation and valuation reset. So if you look at Indian markets, the headline Nifty delivered around 10% return. But the market breadth picture was quite weak. Returns were very, very uneven. Small caps gave negative returns. Even mid caps were very, very underwhelming.
And the FPIs were net sellers.
Oh yes, FPIs pulled out almost $18 to $19 billion, driven by high global rates, a strong dollar, and expensive Indian valuation.
But the market still held up, but you can say the leadership kind of narrowed.
Yes, and of course, yes, domestic inflow helped.
SIP inflow.
SIP inflow and the mutual fund inflow helped.
The sector-wise returns looked very scattered.
Yes, PSU banks and metals were the outperforming sectors with 30% plus kind of returns. Of course, PSU was helped quite a bit by improving balance sheet, lower NPAs,
The interest rate cut.
and the interest rate cuts.
And metals surprised everyone.
Yes, metal surprise. Of course, supply discipline from China was also helped. On the flip side, IT, FMCG, and media were the underperforming sectors. With of course IT with global tech slowdown and money chasing the AI stocks, FMCG with the margin pressures, and advertising with reduced margins.
Factor investing saw mixed returns.
Yes. Again, value was again the only factor which outperformed the indices. Momentum was the underperforming factor with after almost six straight years delivering far lesser returns in 2025.
But I guess momentum returns are tied to the expectations.
Yes, momentum needs earning visibility. Momentum needs sentiments. And with volatility and event-driven flow, it struggled. Quality and growth were also capped by valuation and sector exposures.
Debt investors had a decent year.
Yes, debt investors had a good start. RBI cut the rates by 125 basis points, and the first half was clearly a far better time for debt investors.
But the second half was choppy.
Yes, the liquidity tightened at times, and demand softened. Demand also softened at the lower yields. Still, overall, 2025 marked clearly as a shift from an inflation control to a growth support, which is constructive for debt.
But again, we did not see the entire benefit of the rate cuts passed on to the consumers, which happens in India, which is always questioned on its effectiveness of monetary policy.
Yes, that's a regular question which is asked by clients.
The US market looked strong.
Yes, I would rather say probably very, very narrow leadership. The US stock market, as we call it, was led by the Max 7, and the Max 7 actually led both the Nasdaq and S&P 500 generate better returns. But beyond Max 7, the returns weren't very good.
And AI seems to be the hottest topic in US, with a lot of institutional money chasing AI, which has created lumpy valuations in the short term and some investors fearing a bubble. But AI is the thing people are chasing.
That's where the money is going.
Internationally, outside the US and India, there was a great year.
Yeah, Japan, Hong Kong, and parts of Europe delivered great returns. Japan, after decades of underperformance, benefited from the rising rates, better governance, and shareholder returns.
The Hang Seng Index also delivered great returns. Obviously, it is the other player in the AI race after the US, with China and US leading the two AI race, and a lot of money was chasing.
Yes.
The Hang Seng Index. Commodities was the biggest story in 2025, with gold and silver leading.
Yes, exactly. Gold had the best year in decades. Supported by central bankers buying, supported by geopolitics and rate cut expectations.
But what about silver?
Fantastic, 170% return in a year. Of course, driven by tight supply and probably some speculation and industrial demand. But yes, silver did steal the show in 2025.
So if we had to sum up the last year for our investors, and one key takeaway we take from it.
So I think one key takeaway from Polo Wealth is for sure market and disappoint. Expectation did. The asset allocation matters. Equity, debt, and gold, all of them behave very, very differently. balanced portfolio with global allocation navigated the year far better.
Thank you everyone for watching, and the key takeaway is stay disciplined and stay invested, as this is always the key to creating large value in the long term.